Yes. Start from the beginning.
Start video also.
No, video also. Yes.
Yeah, good afternoon, ladies and gentlemen. I welcome you today for this webinar on transitional provision in GST. The provision, as you know, is quite long and quite elaborate. I will try to wrap up the session within 1 hour and will try to take up a few questions and answers. But that will depend upon the number of people, number of slides I am able to cover. I will begin with thanking Shri Pankaj Arora. He is Senior Manager in GSTN and Deputation from Central Board of Excise and Customs. He is the hard work behind the PowerPoint presentation that you are going to see. I will further like to thank my Executive Assistant Rekha Tatawat, who has actually worked and beautified the whole PPT. And I thank my team training, which has given me full support in carrying out this. And please, I would also like to thank General Manager Shilahu Rao, Capacity Building National E-Governance Division, who has given me opportunity to share this with you. So thank you very much for joining. And now we will begin. So why transitional provision has been given? So as you know, GST is going to come into effect from 1st of July 2017, and existing system of indirect taxation will be replaced by the new GST law. GST is going to impact everybody. Every business is going to be affected by it. And the way we are doing things, we are valuing goods, we are making supplies or calculating duties, etc. Everything is going to change in the new regime. So when we are moving from one regime to another regime, the transition provisions are being provided so that the transition is smooth. So it's a kind of cushion that wherever like any goods which has been sent on, say, on the transition date, or if there is any credit of duties of the previous date, or if there is any contract which is going to run into the new regime also, how to deal with that. For that, government has given elaborate transitional provisions so that all these things are mitigated and people are able to, the taxpayer are benefited out of it. So as you can see, the basic things which are covered in the transition provision is that the returns, whatever credit is available in the returns is carried forward. Then it has provided in a big way migration of the existing taxpayer to the new regime. And it has also provided for input tax credit on inputs contained in stocks held and other things also, as you can see on the slide. So elaborate provisions have been given so that taxpayer gets all the benefit of the transition. So it is also for like pending refund claims, if there is any pending appeal proceedings, how to handle job work, etc. So for all that has been thought of by the government, and elaborate procedures and provisions have been given. So if you see the basic framework which has been given is migration of existing taxpayer, which is covered under section 139 of the CGST Act. Then transitional provisions related to input tax credit, which is given in section 140 of the CGST Act. Then transitional provision relating to job work, which is given under section 141 of the CGST Act. And there are miscellaneous provisions of price revision, appeal review, etc., which is covered in section 142 of the CGST Act. Apart from that, government has also made transitional rules for the transitioning provision. And there are one of the relevant rule is rule 16 of the registration rule. So what we are going to do is that we are not going to cover anything about SGST Act and rules. What you will do that you can refer to them individually, but more or less the provisions are same. One of the sections where transition provision is covered is section 20 and 21 of the IGST Act. As you know, they are going to be IGST Act, CGST Act, SGST Act, and UTGST Act. So these are the various provisions of the CGST Act and UTGST Act and transitional rules which are relevant for this particular topic of us today. Now, if you see a lot of time when you will read the transitional provision, one particular law is referred, which is called existing law. So if I am reading it casually, I may misinterpret with that the existing law is the law which we are reading, but that is not so. Section 248 of the CGST Acts define the existing law, which means any law, notification, order, rule or regulation, which is law, order, rule or regulation relating to levy and collection of duty or tax on goods or services or both, passed or made before the commencement of this act by parliament or any authority or person having the power to make such a law, notification, order, rule or regulation. So basically, that's the definition which has been given in the section 248. But what it actually means is that whatever law which is existing right now, which are governing our levy and collection of duty or tax on goods or services or both. So those are the laws which are called existing law in the CGST Act, section 248. So this is very important section because every time existing law is being referred to, and when we refer to existing law, this is what it means. So this is the crux of the definition. So as I showed you before, there are various sections which are covering CGST transitional provision. We will begin with section 139 of the CGST Act, which deals with the migration of existing taxpayers. So it's not only section 139 of the CGST Act, but section 22(2) of the CGST Act also talks about migration of the existing taxpayer. So every person who are registered or holds a license under the existing law shall be liable to be registered with effect from 1st of July, which is the appointed date. So all the taxes which are being subsumed into GST, they will be migrated into the GST regime. So what we are going to talk about is migration of the existing taxpayer. But there are two things which is very important for the existing taxpayer, that he or she must be registered under any previous law, and he should have a valid PAN. And only then a provisional RC will be granted to that taxpayer. So these are the two most important things. So he will be issued a provisional certificate of registration on provisional basis, and it will be available on the portal. So it will be valid unless it is replaced by a final certificate of registration, and it is liable to be cancelled if all the provisions or conditions prescribed is not complied with. And final registration certificate will be granted as in the manner prescribed, which I am going to cover in my next slide. Then certificate of registration issued to a person shall be deemed to have not been issued if said registration is cancelled. So if it is cancelled in pursuance to any application filed by such person, then it will be assumed that such registration was never issued to him. Now, that's what the Rule 17 of the registration rules speaks about. Persons registered under the existing law has to enroll on the common portal, that is www.gst.gov.in. As you know, this exercise started from 8th of November 2016 and continued till 30th April 2017. Again, a window was opened from 1st of June 2017 till 15th of June 2017. And the third time window is going to open from 25th June 2017. So registration is granted on a provisional basis, and the form in which registration is granted is given as GST Reg 25. And person granted this multiple registration under existing law on single basis will be granted one provisional registration under GST, and he is supposed to submit a form GST Reg 26 within 3 months of the he has to submit all the documents within 3 months of the appointed date. And if information which he has submitted is found to be correct, then RC will be issued in the form GST Reg 06. And information is not furnished or it is incomplete or incorrect, then provisional registration shall be cancelled, and that will be intimated to the taxpayer in form GST Reg 28. But an opportunity will be given which will be conveyed to him in the form GST Reg 27. Person who are not liable to register under GST, like who are already registered and they are not liable to register in GST, they will file an application in form just GST Res 29 within 30 days of the appointed date for cancellation of their provisional registration. So if you see, everything is provided. If you are liable to register under the new law and you were registered in the existing law, you had a valid PAN, then you are going to apply. That is being will be scrutinized, and then a provisional registration certificate and final registration certificate will be issued. Provisional registration certificate will be given for the initially, and if you don't want to continue in the new regime, then you have to apply and in form Reg 29 for cancellation of your provisional registration certificate, which is granted to you. So that's about section 139 of the CGST Act. Now I will cover section 140 of the CGST Act, which covers about, which talks about credit of the inputs and the services, IST, and what about the credit which is there in the return. So the first section is section 141. It is not 141, it is 140 subsection 1. And transitional rule which is applicable is rule 1 subsection sub rule 1. And if you see, if you notice that rule 1 sub rule 1 is applicable to whole of section 140. So whatever provisions are there in section 140, transition rule 1.1 will be applicable to all of them. So the entitlement for credit amount carried forward in the return. So if there is a taxpayer who has shown any particular credit in his return, he is entitled for carrying forward that credit into his return, but subject to the condition that the person should not opt for a composition scheme. As you know, in composition scheme, taxpayer is not liable to take any credit and is not liable to pay pass on any credit. He is liable to pay some tax. So it is not applicable to persons or taxpayer opting for composition scheme. The amount should be carried forward in the return relating to the period ending with the day immediately preceding the appointed date, which means that on the 30th June, whatever return he is supposed to file under various law, he must file that 30th June 2017 return, and that return will be carried forward to his next in the new GST regime. So what we are talking about is that the credit has already been taken and it has already been shown in the return, then the taxpayer will be eligible for that credit in the GST regime. So further conditions are in that is that the credit must be admissible under the GST Act. So if I am taking credit on something which is not admissible under the GST law, then even if you are showing it in the return, you will not be entitled for credit in the new regime. Further, all the returns which is required for last 6 months immediately preceding the appointed day has been furnished by the such registered person. So if any of the return which is missing, then he will not be entitled for this particular credit which is in the return. And then one of the condition is that such it does not relate to goods manufactured and cleared under such exemption notification as are notified by the government. So government is notifying certain goods and these are cleared under such exemption notification, then he will not be entitled for that credit. So similar provisions will be is being provided in the final SGST laws also. Then these credits amount carried forward in the last return shall be credited to the electronic credit ledger of the registered person. So it will automatically be credited to the electronic credit ledger. As you know, there are 3 kinds of ledgers which will be given to the taxpayer. One is the electronic credit ledger, electronic cash ledger, and electronic liability register. So this credit will be credited to the electronic credit ledger of the taxpayer. Then and this credit can be utilized for payment of tax against supply of goods or services under GST regime. So this credit which was there to the taxpayer in the last regime and he has shown in the return, and that credit will be shown to his electronic credit ledger, and he can utilize that credit for making payments. So the procedure which he has to observe is that every registered person shall be entitled for it if within 90 days from the appointed date, he submits a declaration in the form GST Tran 1. If you see, this form is to be electronically submitted, and this is very comprehensive, and it covers most of the provisions of the transition except for registration. So it has provided what information has to be given. So if a taxpayer wants to carry forward this credit which is already in his return, then he has to submit a form GST Trans 1. So that is what the form is to be electronically submitted by him. Then he has to specify in the declaration that the amount of input tax credit to which he is entitled to. Then above period can be extended for another 90 days by commissioner on recommendation of the council. Then there is a specific provision which is given for EOU or EHTP units. If some taxpayer has received the inputs from export-oriented units, then the credit shall be allowed to the extent as provided in Sub-Rule 7 of Rule 3 of the SENVET credit rules. So whatever is admissibility of that credit under Sub-Rule 3 of the SENVET credit rules, then that will be admissible to the taxpayer in the new regime. Then, as I have already discussed, Rule 1.1 of the transition rule is applicable to this particular rule. Then, applicable for claim of ITC of commercial tax, entry tax under Section 141 of the State GST Act and State GST rule. So, similarly, commercial tax and entry tax, whatever credit is admissible in the current state laws will also be admissible, provided that declaration is made in the form GST Tran 1. Then what we are going to cover is that the unavailed SENVET credit in respect of capital goods. If you see, this is section 142 of the CGST Act, and the transition rules applicable are Rule 1.1 and Rule 1.2a of the transition rules. So what is provided in the existing SENVET credit rule is that the SENVET credit has to be taken 50% in the current financial year, and the 50% has to be taken in the next financial year. So if the taxpayer has already shown that credit in his return, suppose then he need not avail this facility because it has already been shown, and he will be entitled for it subject to the condition of Section 141 for the credit in the new regime. So if he has already availed the credit and shown it in the return, then this provision is not applicable. This is applicable that if he has availed half the credit and he wants to avail the credit remaining half of the credit, then Section 142 of the CGST Act will be applicable. So it is applicable for registered persons in the existing law. This is subject to the condition that he should not opt for composition scheme, and it should not be carried forward in the return. Because if he is carried forward in the return, he cannot take it twice. Then no credit will be taken unless the credit on that capital good was admissible under the existing law. If you see, existing law has come and this wording will come again and again. That's why we covered existing law at the beginning of the session. So no credit will be allowable on the capital good if it was not admissible under the existing law, which means the law which is being subsumed in the GST regime, and is also admissible as input tax credit under GST. So supposing there is a capital goods which was not admissible in earlier law but is being admissible in the current law, so that is not covered here. What is covered here is that capital goods credit which was not taken earlier, not shown in the return, and it was admissible in the earlier law, it is admissible in the current GST law, then he is entitled for taking that credit. So what credit is available to him is that aggregate entitled amount of SENVET credit minus by reducing it by SENVET credit already availed under the existing law in such capital good. So whatever is admissible minus whatever has already been availed. So procedure to be observed is given in Rule 1.1 and Rule 1.2a of the transition rule. So he has to file a declaration in respect of every item of the capital goods. He has to give an invoice-wise details. Then he has to give what is the total SENVET credit involved, what is availed or utilized, and what is yet to be availed or utilized. So that's so we have talked about two sections of 140. Now we are coming to section 143 of the CGST Act. So the transition rules which is applicable is, apart from Rule 1.1, which is universally applicable to section 140. Transition rule which is applicable is transition rule 1(2)(b). And if you notice that rule 1(2)(b) is applicable to other sections also, like section 144(b), 6 and 8. So whenever we talk about transition rule 1(2)(b), it is applicable to section 143, 144(b), 146 and 148. So what does section 143 says? So it's talking about following registered taxable person. So who was not liable to be registered under the existing law. So he was somebody, a taxpayer, or he was a taxable person. He was not liable to register under the existing law, and who was engaged in manufacture of exempted goods or provision of exempted service, or who was providing work contract service and availing the benefit of notification 26/2012 of service tax, or he was a first stage dealer or a second stage dealer, or who was a registered importer or a depot of a manufacturer. So if that person is any of these category, then he shall be entitled to take credit of eligible duties in respect of inputs which are held in his stock, or it is contained in semi-finished goods, or is in his finished goods on the appointed date. So if there is somebody, so this section is talking about a person who was not liable to register under the existing law, or who was a first stage dealer or second stage dealer, or a registered importer or a depot of a manufacturer, who was entitled to take credit of eligible duties of input held in stock or input containing semi-finished goods or finished goods, subject to the condition which I am going to cover now. Now, what is important point on this slide is eligible duties. I am going to separately discuss what are the eligible duties which is being talked about. So the conditions for availing credit under section 143 for the persons which we talked about in the last slide is that these inputs and goods are used for making or intended to be used for making taxable supplies in GST. So that I should have an intention to use these goods for making taxable supplies in GST. Then that goods, whatever goods on which I am taking credit, should be allowable and admissible under GST law. Then the third point is that he should be in possession of invoice or other related documents evidencing payment or duty. So I will just briefly touch on this. So either he should have invoice, or he should have a related documents which is being under proposal and being discussed, that is credit transfer document. I will cover it briefly later on. So he should have a valid invoice to show that yes, duty was paid on it. Then such invoice document should not be older than 12 months preceding the appointed day. And supplier of service is not eligible for any abatement under this act. So where taxable person other than manufacturer or supplier of service is not in possession of any invoice or any other evidencing document, then he shall be allowed to take credit at the specified rate. And taxable person passes on the benefit of credit by way of reduced prices to the recipient. So these persons are going to get credit benefit. So there is going to be certain reduction in the there is going to be certain reduction in the there is going to be certain benefit to the taxpayer, and taxpayer should pass on this benefit to the to his receiver, like the person who is buying goods from him. So that's why this has been particularly inserted. Then I will just cover one small point. So the credit which will be available to the taxpayer in the new regime will be under three conditions. तीन conditions हैं. पहली condition ये है कि उसके पास एक valid document हो, he has a valid document, or he uses a CTD, that is credit transfer document, or he uses this particular rule, rule 14A 1 of transition rule. So अगर मान लीजिए उसके पास कोई टैक्स पेयर है, उसके पास who was not liable to register, जिसको हमने 2 स्लाइड पहले देखा था, and he is under the existing law, but he is not in possession of invoice, and then he will be allowed credit at following rate. अगर CGST rate 9% है, मतलब उस पर्टिकुलर गुड्स पे क्रेडिट ड्यूटी जो है 18% होगी, 9% CGST और 9% SGST. तो उसको ड्यूटी जो CGST की पे करनी पड़ेगी 9%. He will pay 9% of the CGST duty. If it is more than 18% or more, total duty is 18% or more, that means CGST rate is 9% or more, then he will be liable to tax credit of 60% of such goods. So he will only be liable to pay 40% of the duty. And if the rate of duty is less than 18% total, including CGST and SGST, that is, if CGST payable is less than 9%, then he will be liable to credit of 40%. So what is going to happen is that he has to first pay the tax. The tax has to be paid as per the assessable value of the goods, and after that, he will be entitled for 60% of the credit if the total duty payable was more than 18%, and he will be entitled for 40% of the credit if total duty payable was less than 18%. So what government has envisaged is that the tax has been paid and then he is entitled for credit of it in this particular rate. And if he has paid any IGST tax, then credit will be allowable at the rate of 30% and 20%. I will just leave you with a thought ki why it is 30% and 20% here in IGST, but it is 60% or 40% in CGST. I think you should ponder upon that. Then scheme is available for 6 tax periods from the appointed date. So this particular scheme is available for 6 tax periods from the appointed date. Then what is the associated rule? Rule associated is Rule 14A1. Then the condition which is given is that such goods are not wholly exempt from excise duty or are non-nil rated. And document for procurement of such good is available. Then registered person will furnish the details of the stock held by him and will submit a form GST Tran 2 at the end of each 6 tax period. So this scheme is available up to 6 tax period, and he has to submit a form for each 6 tax period, form GST Tran 2. The amount of credit allowed shall be credited to the electronic credit ledger of the applicant. So this is rule. This is also written in Rule 3 of the transition rule, and it is universally applicable to wherever credit is allowable. It will be credited to the electronic credit ledger of the applicant. And he has to store the stock in such a manner that is easily identifiable. So if taxpayer goes there, tax officer goes there, then the registered person should be able to show to him that these are the goods on which I am taking such credit. So these are the persons who are allowable for this credit. The credit is allowable under these conditions, and he has to file a return up to 6 tax period. Then the similar provisions are also given in Rule 14A1 of the transition rule in the SGST rules, which I am not going to cover. You can go through it later on. Now I will go to section 144 of the CGST Act. So section 144 of the CGST Act talks about the person who are supplying taxable or exempted goods and services. So the provision earlier was that a person is supplying a goods or services which involves taxable goods and exempted goods or exempted services. Both he is supplying, then he has to follow certain rules. Like either he could segregate his input at the earlier stage, or he's going to make certain reversal at the prescribed rate of the value of the goods. So that was provided in the earlier law. So it may happen that particular taxpayer is actually migrated into the new regime. So what about his input tax credit? So what will happen to is that he will, who a registered taxable person who was in the existing tax law, manufacturing taxable as well as exempted goods, or supplying taxable as well as exempted supply, but all these are taxable under the GST regime, then he shall be entitled to take credit in terms of section 141 for amount of standard credit carried forward in the return. So whatever is carried forward in his return, he will be entitled for that credit as per section 141. And whatever is the credit on inputs which are in his stock or inputs contained in semi-finished or finished goods, he is entitled for that credit under section 143. So if you see, government has given very elaborate provision so that transitions is smooth in the new tax regime. So that's about the person who was manufacturing the taxable goods as well as exempted goods in the earlier regime, and those goods have become liable to tax under the new tax regime. अब हम लोग बात करेंगे सेक्शन 145 की, जो कि बात करता है टैक्स उन टैक्स पेयर के बारे में जिसमें कि इसका रेलेवेंट जो ट्रांजिशन रूल है वो रूल 1(2)(c) है कि क्रेडिट तभी उसको अलाउेबल होगा इफ द इनवॉइसेस और एनी अदर ड्यूटी और टैक्स पेइंग डॉक्यूमेंट्स ऑफ द सेम वाज रिकॉर्डेड इन द बुक्स ऑफ अकाउंट्स ऑफ सच पर्सन विद इन 30 days. So the provision is for that taxpayer जिसका माल it started on say 30th of June or it has started on 28th of June and is received by him after the 1st of July 2017. Then what will happen to his credit? So this particular rule, section 145, talks about those goods which are received after appointed date, but the tax was on it based on the earlier regime. So credit is allowed only if the invoices or any other duty or tax paying document of the same was recorded in the books of account of such person within 30 days from the appointed date. तो उसको अपने बुक्स ऑफ अकाउंट में इसको रिकॉर्ड करना पड़ेगा विद इन 30 days ऑफ द अपॉइंटेड डेट. और कमिश्नर के पास ये पावर दी गई है कि इस 30 days को ऑन सफिशिएंट कॉस्ट बीइंग शोन कुड बी एक्सटेंडेड फॉर अनदर 30 days. द पर्सन विद इन 90 days, उसको अगले 90 दिनों के अंदर फ्रॉम द अपॉइंटेड डे हैज टू सबमिट अ फॉर्म GST or Tran 1, जिसके बारे में हमने पहले चर्चा की थी. He has to submit following details like name of the supplier, description and value and quantity of the goods, amount of duty or tax charged by the supplier, and date of entry of such goods in his books of accounts of the recipient. तो रेसिपिएंट डिक्लेयर कर रहा है कि ये गुड्स थे जो कि 30 जून के पहले चले थे, उसमें ड्यूटी पे हुई थी और मेरे पास अपॉइंटेड डे के बाद आए हैं और उसका वो क्रेडिट इसमें लेने की वो ले रहा है. तो he has to declare such into the new regime, new tax regime. So that was section 145. Now I am going to cover section 146 of the CGST Act. The relevant transition rule is rule 1(2)(b) of the transition rule. तो ये टैक्स पेयर उसके बारे में बात करता है, उन टैक्स पेयर्स के बारे में बात करता है जो कि एग्जिस्टिंग लॉ में एक फिक्स रेट पे कर रहे थे. They were either paying under composition or they were compounding taxpayer or they were paying at a fixed rate. मतलब फिक्स रेट क्या होता है कि गवर्नमेंट बोलती है, जैसे कि हमारे यहाँ in the Central Excise Act it was fixed on the pan masala machines. What was happening was that if there is a pan masala manufacturer, he was given an option for compounding. What he was supposed to do is that he has to determine the speed of the machine and pay duty according to the speed of the machine. So that is what the compounding taxpayer means. So a registered transition provision में उनको भी credit allowable किया गया है if they follow following conditions. So he will be entitled for take credit of eligible duties and taxes in respect of input held in stock or input contained in semi-finished goods or finished goods on the appointed date, only if such inputs or goods are used or intended to be used for making taxable supplies under GST. He must intend to make taxable supplies under GST. That person is not paying tax under composition scheme, क्योंकि composition scheme में you are not allowed to take credit and you are not allowed to pass on credit. Then that person is eligible for input tax credit on such inputs under GST, and he is in possession of invoice or other prescribed documents for taking such credit, and that invoice should not be more than 12 months old. So these are the conditions under which if a person who was availing compounded levy under the existing law, and that he can actually avail credit in these manners. He has to again submit a declaration form GST or Tran 1 on common portal within 90 days of the appointed date. Now, what we will cover under this section is that what is the eligible duties. So we are slightly jumping. We have covered section 140 from 1 to 6, but we want to have this eligible duties right over here. So eligible duties are the duties, that is additional duties of excise, of goods of special importance act, or additional duty leviable under section 3 of the Custom Tariff Act, or duty of excise, which is specified in the first schedule or second schedule to the Central Excise Tariff Act, and NCC D duty. In respect of input held in stock, input contained in semi-finished or finished goods. So what we are talking about over here is that what are the eligible duties on which he can take credit in the new GST regime, subject to the fulfillment of condition in the last return, or in his last in his inputs contained in his stock. So these are the eligible inputs and input services on which he will be entitled for credit. But this is applicable to section 145. If you see, the difference is the last point, which is the service tax leviable under section 66B of the Finance Act. So what has happened is that apart from the if you are working under section 146, then you will be eligible for inputs under section 143, 144, and 146 on the inputs contained in semi-finished or finished goods or the inputs. But under section 145, you will be eligible for input services also. So that's the difference between these two slides. So that's why we have inserted it over here. So now we are going to move on, and we are going to talk about section 147 of the CGST Act. And as you see, the time is ticking and we have just covered half of it. So I will try to do as much justice to the topic as possible, and I will request you to continue for some more time. And regarding the question and answer, there are a lot of questions being raised. So what we are going to do is that we are going to take all those questions and we will answer in the end. Otherwise, we will not be able to cover the topic itself. It's quite elaborate. So section 147 of the CGST Act talks about a person who is registered as an input service distributor, and he can distribute credit in respect of services received before appointed date, even if invoices related to such service are received on or after the appointed date. So this section talks about input service distributor, that if there is any services which was received before the appointed date, and even if invoices related to that is received later on, that this credit can be distributed by input service distributor. Now we are going to talk about section 148 of the CGST Act, which talks about the centralized registration. So if there is a person who is having a centralized registration in the existing law, and he has obtained registration under GST, then he will be allowed to take credit in his electronic credit ledger of the submit credit carried forward in a return furnished under the existing law. And return under existing law is to be furnished within 3 months from the appointed date. Then input credit will be allowed as claimed in original return or reduced amount where it is reduced in the revised return. So if it's reducing his original return, then that input credit will be accordingly revised. And credit will only be allowed if it is admissible under GST as ITC. And credit may be transferred to any of the unit of the registered taxable person having in the same PAN for which centralized registration was taken. So these are the conditions in which centralized registrants could pass on credit. Then he has to submit a declaration in form GST Tran 1 within 90 days of the appointed days of the inputs which is contained, of the details of the stock which is held with him on the appointed day. Now we will cover section 149 of the CGST Act. The transition rules relevant are Rule 11 and Rule 12B. In case of standby credit of input services is reversed under the earlier law due to non-payment of consideration within 3 months, such credit can be claimed again. So there is a provision under the existing law that if you have not paid the supplier his amount, then that credit will be reversed. And if you have made that reversal and you make this payment in the GST regime after the 3 months, within 3 months of the appointed day, then you will be entitled for that credit. So it's covering that provision that if he has not made the payment and his credit was reversed, he can actually take credit in the GST regime within 3 months. So that's what section 149 of the CGST Act talked about. So we have covered two sections, one section 139 and one section 140. 40. Now we are going to cover section 141 of the CGST Act. As you can see, this talks about job work, tests, etc. So the applicable provision of section 141 says that if inputs were sent on job work in the existing law for which were partially processed for testing, reprocessing, reconditioning, and are returned on or after 1st of July, or if semi-finished goods was removed to any other premises for carrying out certain manufacturing process prior to the appointed date but returned to the said place on or after the appointed date, or excisable goods were removed for carrying out any test or any other purpose. So three things are covered. One, it is sent for a job work. Second, semi-finished goods were cleared for certain purposes. Third, excisable goods were removed for carrying out any tests. Then no taxes is payable if the said input, semi-finished goods or excisable goods are returned within 6 months of the appointed date. So the window has been given up to 6 months from the appointed date. So if any of the condition is satisfied and it is returned within 6 months, then these goods can be returned back within 6 months. This time period is further extendable by the commissioner for 3 months on sufficient cause being shown. And if it is not returned within the prescribed then the input credit will be liable to be recovered as provided in section 142(8)(a) as an arrear. And in case of section 141(2) and 3, manufacturer can transfer such goods directly from the job worker premises to another buyer, or he can export after paying applicable taxes. The tax under section 141, 2 or 3 shall not be payable by the manufacturer and job worker if both of them declare such details in the form GSTR GST Trans 1 within 90 days of the appointed date. This is as per section 141(4) read with rule 3 of the transition rules. So that's about the rule 141. Now we will come to section 142 of the CGST Act, which talks about price revision, refund, adjudication, etc. So this gives a brief snapshot of the what all being covered under the section 142. So we will first discuss section 141 of the return of the duty paid goods. So if there is a removal of the goods in which duty was paid under the existing law at the time of removal, but that event has not happened 6 months prior to the appointed date, and it is returned to any place of business now. And if it is returned by a non-registered person within 6 months from the appointed day, and it is identifiable to the satisfaction of the proper officer, then refund of duty under existing law will be allowable to the registered person. And if those goods were supplied to a registered person, then if there is any return, that will be considered as a supply. So this benefit is applicable for refund if only the goods are supplied to a non-registered person. For a registered person, it will come as a supply. Supposing there is a price revision, section 142(2). Supposing there is a price revision, what happens then thereafter? So there was a contract which was entered into prior to the appointed date for supply of goods or services, and the price is revised later on after the appointed date, and there is upward revision in the price on or after the appointed date, then supplier can issue a supplementary invoice or debit note to recipient within 30 days from such revision. And if there is a downward revision in the price, then supplier can issue a supplementary invoice or credit note to the recipient within 30 days from such revision. Such supplementary invoice or debit or credit note shall be deemed as if it is being issued under the outward supply made under this Act. But registered taxable person shall not be allowed to reduce his tax liability if the recipient of invoice or credit note has already taken such input tax credit and he has not reversed it. So if credit has already been taken, then liability of the supplier will not get reduced. So if there is any credit note or debit note issued for the effect of the price revision, that is covered under section 142(2) of the CGST Act. So what happens to the refund, which is refund claim as on 1st of July 2017? So if there is any refund claim or standby credit, duty, tax, interest under the existing law, and if the application is filed before or after the appointed day, then the refund will be, that application will be processed under the existing law. And the person will be eligible to pay cash, will be eligible to given refund in cash. And if standby credit is fully or partially rejected, the amount so rejected shall lapse. So if he is allowed refund, it will be given in cash. If it is rejected, then that amount is going to lapse. From now onwards, wherever it is given back to the tax, it will be given in cash. That is the thumb rule. And if it is rejected, then it is going to lapse. But if he has to first prove that Section 11B2 of the Central Excise Act is not applicable to him, in the sense that the benefit of credit has been passed on by him. And if he has already shown this refund claim and credit balance has been carried forward, he will not be liable for any refund claim. So that's about refund of the tax credit under the existing law. Then we are going to talk about Section 142(4) of the CGST Act, in which refund claim of any tax, duty, or duty paid under existing law in respect of goods or services exported before or after the appointed date. So if there is going to be an export and duty has been paid, export could be even after the appointed date, then refund will be disposed of in terms of existing law. And if there is any refund of standby credit which is fully or partially rejected, then it is going to lapse. And no refund shall be allowed of any standby credit where the balance is being carried forward under this act. So if balance is carried forward, he will not be allowed to take any credit. So refund claims filed after the appointed day for refund of tax paid under existing law. What we have talked about is the export of the goods. Now we are going to talk about the services, and the services which is not provided. So that is what we are going to talk about now under Section 142(5). So refund claims filed after the appointed date for refund of tax paid under the existing law in which services were not provided. Then refund amount, when admissible to the taxpayer, will be paid in cash only, and it should be proved that that amount, the incident of that amount, is borne by the supplier and is not paid. It is not supplied by the. It has not been passed on to the buyer. So the person who is claiming refund should have borne the incidence of duty on him or tax, so that he is entitled for refund under this section. Then we are going to talk about Section 142(6). We are going to talk about both Section A and B. So all appeals, review, or reference relating to claim of recovery of standby credit which is initiated before or after the appointed date will be disposed of in terms of the existing law only. And any amount of standby credit, output tax, or tax found to be admissible to the claimant shall be refunded in cash. But he has to prove that the incident of credit has not been passed on. An amount, if rejected, will not be admissible as input tax credit under this act, and no refund shall be allowed for any amount of standby credit where the balance of the said amount has been carried forward. And after adjudication, so it could be two things: either he is admissible, he has become entitled for the refund. So that's what we have talked about. And if that amount becomes recoverable from that person, then unless recovered under existing law, if it is not recovered under the existing law, it will be recovered as arrear of duty or tax under this act, and the amount that recovered will not be admissible as ITC. So what we should note is that what is the underlying sense of the Section 142 is that if anything which is entitled to the person, it will be given in cash. If anything is rejected, then he is not entitled for any credit of that. So that's about claim or recovery of standby credit. If he's entitled, he will be given in cash. If it's rejected, then it will not be admissible as input tax, and any balance amount is going to lapse. Now we are going to talk about Section 142(7) of the output duty tax. So if there is any appeal, review, or reference relating to any output duty or tax liability which was initiated before the appointed date or it is continuing under the existing, it is started under the existing law after the appointed date, then it will be disposed of as per the provisions of the existing law. And if any amount becomes recoverable as a result of such appeal, review, or reference, then the same, unless recovered under the existing law, like if it is already paid under the existing law, if it is not recovered in that manner, it will be recovered as an arrear of tax under this current act. And the amount so recovered will not be admissible as input tax credit under the current act. And any amount which becomes admissible to the claimant, then it will be refunded in cash, and he has to prove that he has he has borne the incidence of that duty on himself. And if amount is rejected, then if then he will not be entitled for any input tax credit under this act. So if there is any assessment or adjudication proceedings which is going on or after the appointed date, then under the existing law, then if any amount, tax, interest, fine or penalty becomes recoverable from the person, unless it is paid in the existing law, will be recovered as an arrear of tax under this act, and the amount so recovered will not be entitled for input tax credit. And if it is become refundable, it will be given in cash, and he has to prove that he has not borne the incident of that duty. And if it is rejected, then he will not be entitled for input tax credit under this act. So that's about section 148. Now I'm 142.8. Now I'm going to cover section 142.9. So 142.9 talks about revision of the return. So if there is any revision of the return being done by the taxpayer, which is furnished by the existing law, and is allowed to do that, and amount becomes recoverable or sandwich credit becomes inadmissible, then same shall, unless recovered under the existing law, will be recovered as arrears under the existing under this act, which is the CGST Act. And such amounts so recovered will not be admissible as input tax credit. And if on pursuance of that revision of the return within the time limit specified for such revision under the existing law, and such becomes refundable as credit, then that amount will be refunded as in cash, but he has to show that the incident of duty was borne by him. And amount will be rejected. Any amount which is rejected, taxpayer will not be entitled for any input tax credit. If you see the provisions, it has the same underlying feeling in all the provision. If it is admissible and it is not paid, then it will be given in cash. He has to show that it is not borne by him. The incident of duty is borne by him, and the amount, if it is rejected, input tax credit will not be admissible. And if it is liable to be recovered, it is not recovered under the existing law, will be recovered as arrears under the existing under the new law. Now we are going to talk about section 142.10 about the contract which was entered prior to the appointed date of the goods and services which was supplied on or after the appointed date. Then the person is liable for payment of taxes under the GST law. So if there is any service which is not paid and the liability of the payment of tax comes, then he has to pay the taxes under the new GST law. Now we will cover the supply of goods or services under section 142.11. So what this section is going to talk about is that the taxes which has already been paid, to the extent it has already been paid under the Value Added Tax Act, then that amount of that, up to that extent, the taxes will not be payable under the new regime. And similarly, the second subsection talks about subsection 13 of section 142 talks about if any services on which taxes has to be paid and the tax was already paid under that existing regime, then he will not be allowed to pay. He's to that extent, he is not liable to pay tax to that extent under the GST law. And where tax was paid on any supply under VAT and service tax, tax shall be leviable under this act, and the taxable person shall be entitled to take credit of VAT and service tax paid under the existing law to the extent of supplies made after the appointed date as prescribed. So for this, for section 142.11c, which is the last section, within a period of 90 days, the taxpayer has to submit a declaration in form GST trans 2, specifying therein the proportion of supply of in which VAT or service tax has been paid before the appointed day, but the supply is made after the appointed day. So this is covering the provision where the tax has already been paid under the existing VAT law or under service tax law, or it is such a supply in which both VAT and service tax is payable. This section covers the such situation. Now we will cover section 142.12, where goods are sold on the approval basis under the existing regime. So tax not to be payable when goods were sent on approval basis, but not earlier than the 6 months before the appointed dates. And such goods are rejected or not approved and returned by the buyer within the 6 months of the appointed date. But this 6 months period of return could be extended by commissioner for another 2 months. Then tax is to be paid if goods are liable for payment of tax under the GST regime, and tax will be payable by a person returning the goods if the if the goods are returned after 6 months of the or the extended period, and tax shall be payable by the person who has sent goods on approval basis if the goods are not returned within the 6 months or extended period of the time. Transition Rule 4 covers this, and the details of which is to be submitted in form GST Tran 1 within 90 days. So it says that the goods are sent on the approval basis. Then this particular section covers that particular eventuality, that if the goods are returned after a period of 6 months, then the person who is returning the goods is liable to pay the tax. And if the person has not returned the goods, that the person who has supplied the goods is liable to pay tax under the GST regime. Now we will cover section 142.13, that is about tax deducted. Tax deducted at source. So if any sale of goods which has happened in which tax was required to be deducted and invoice are issued before the appointed date, then payment of such invoices is to be made on or after the appointed date. Then TDS under section 51 shall not be made by the deductor. So if there is any sale of the goods which has happened, invoices have been issued, but payment is made later on, then no TDS has to be deducted, because the deduction would have happened already. So this is for state law or any UT law related to value added tax. So now that covers our sections relating to CGST law. I'm going to cover now import of services and interstate supply under IGST law. The relevant section are section 20 and section 21 of the IGST law. So the first point which says is that the transitional provision as contained in CGST Act shall apply mutatis mutandis, means as is where is basis will be applicable to the IGST Act also. That is covered in the section 20. Section 21 of the CGST Act deals with the import of services made on or after the appointed date. So whatever goods or services are to be supplied has already been dealt in the CGST Act. What we are going to talk about is the import of services under IGST law. So if any import of services is made on or after the appointed date, then the taxpayers shall be liable to pay tax under the IGST Act, regardless of whether the transaction of such import of services was initiated before the appointed date. So even if the transaction was initiated before the appointed date, the taxpayer is liable to pay tax under the IGST Act, provided that if the tax on such import of services has not been paid in full under the existing law, no tax shall be payable on such import under this Act. So if it is full tax is already paid, then he is not liable to pay any tax under the existing under the new law, that is the GST regime. Provided further that if the tax on such import as services has been paid in part and full, then the balance amount tax has to be paid under the IGST Act. And a transaction shall deemed to have been initiated before the appointed date if either the invoice relating to such supply or payment either in part or full has been received or has been made before the appointed date. So transaction must be initiated. These are the two conditions which proves that the transaction has indeed taken place. And if a tax is already paid, then you need not pay any tax. And if it is paid part or full, then it has to be paid, remaining tax has to be paid under the IGST Act. Now I will just cover the proposed changes in the standard credit rules, that is the credit transfer document. As we have discussed, there are three methods. Either he should have a valid invoice, then second is credit transfer document, which is yet to be finalized. And the third thing is that he is allowed a deemed credit of 60% of the credit after payment of the tax under the GST regime. So the draft rules for issue of credit transfer document will be inserted in the Standard Credit Rules 2004 of the Central Excise Rules. For transfer of credit paid on specified goods with a trader as on 1st July, which is the draft provision which says that where the value of such goods is higher than rupees 25,000 per piece and bears the brand name and are easily identifiable, or it is verifiable from the records of clearance or duty payment relatable to each piece of such goods, and it is maintained by the manufacturer and trader, then he will be entitled for credit on the basis of such credit transfer document. And it should be serially numbered, and the manufacturer is satisfied. The condition given is that manufacturer is satisfied that the dealer to whom credit transfer document is issued is in possession of such manufactured goods. And there are other provisions which is provided, that it should be within 30 days of the it should be issued within the 30 days of the appointed date, and copy of the corresponding invoices shall be enclosed. Then CTD will not be issued in favor of dealer to whom invoice was issued for the same goods, like so on and so on. Then we will just see that transition form, and then we will take on some of the questions. So that's how the transition form is. GST Tran 1. First one is that amount of standard credit carried forward. 5A talks about amounts of standard credit carried forward to electronic credit ledger as central tax. Section 141 and Section 144A. Then details of statutory form receipt for which credit is being carried forward. Then C talks about the amount of tax credit carried forward to the electronic credit ledger as state/duty tax. Then 6 talks about details of capital goods for which unavailable credit has been carried forward, Section 142. Then Section 7 talks about Section 143, 144B, 146. And Section 8 here talks about Section 148. Section 9 talks about Section 141. Section 10 talks about Section 140-14. I think there is something wrong because I was not able to see Section 140-14. Then GST trans 2, the format is like this. So in part 4, he has to fill in the details of inputs held on stock and the appointed date. In part 5, he has to fill in the credit on state tax on the stock mentioned in 4 above. Then proposed CDD form looks like this. This is to be filled by the manufacturer. The bottom one is to be filled by the dealer availing the standard credit. Then documents to be maintained by the manufacturer is in this format, and the documents to be maintained by the dealer is in this format. So thank you very much for being here. I really appreciate your time, and I hope that this was useful to you. So if there are certain queries, then I will ask some question and answer, and we will give elaborate replies to these queries later on. So some of the questions I could see over here is what I will do is that I will take on this queries later on. And thank you very much for being here, and we will close from this point onwards. Thank you very much. It was really a pleasure being with you. I want to thank again Mr. Pankaj Arora, my executive assistant Rekha Tatawat, and Mr. Rao and his full team, which has made this possible. Thank you very much. Over to you, Mr. Rao.
Thank you, sir, for giving such a wonderful session. A lot of questions, I wish you could answer some of the relevant questions.
So I hope that will actually
have some kind of interaction. Is it possible for you, sir, to take some questions?
Okay. If possible, please take
one or two questions, sir, which will be more relevant.
So I will just open on the
Q&A sections.
yeah. So these questions are quite big, and I think we will have to devote time to. Can this PPT downloaded at local device? We will provide that in the PDF format. And how GST will change the e-commerce industry. So this is not the right forum to ask because we are not dealing in that. Is it beneficial for companies doing e-commerce? So there are a lot of questions related to other topics of the GST regime. Whether input credit of services availed during service tax regime, that is up to 30th June, will be available in GST regime. Yes, it will be available. If it is transferred in his return, it will be available. So that's the answer to your question. Then whether non-education charitable. So there are a lot of questions. I think Mr. Rao will close at this question, this point, and we will be answering question and answer in KMS software, which is provided by the NEGD. Over to you, Mr. Rao.
Thank you, sir. So we asked the participants to rate this webinar. We will definitely answer you all the questions. There are 335 questions we received. I hope the participants will understand. The speaker may not able to answer all 336, 337 questions we already placed before us. We will be answering all your question and answers that will be uploaded in our KMS portal. So we already uploaded GST webinars, earlier webinars in our KMS portal. You can download the PPT and video also from there. And I also request the participants to please rate this webinar because this helps us to deliver you the better webinars in the days to come. We already, the poll has been initiated from our side. Please don't hesitate. We want a good feedback. Give us your feedback so that we can able to deliver a better webinars. So over to you, Shalini. You would like to give any other instructions apart from this?
Thank you so much, everyone, for your enthusiastic participation. We look forward for certain webinars in the coming time as well. We'll keep you posted through LMS and KMS for sharing the required information further. Good day. Have a nice day to all of you. Thank you so much.